So the first step when you're looking to enter any market is you need to meet the players there. So you need to know who the brokers are. You need to know who's buying stuff. You need to know who the managers are. In the moment that you meet the players and start making those connections and learning information from the local people in that market, then you can start to learn the market. What website can I go to figure out a cap rate? I'm sure you could Google it. Even if you go to CoStar, all these places have some data, but the best data is the local market data. Hello and welcome back to another episode of the Real Entrepreneur Podcast. My name is Alex Kaufman. Thank you guys for tuning back in today. Our goal with this podcast is to give you insights, tell you what we have going on with our business. The market's changing right now. Again, I think for the better. Rates are coming down. We're seeing opportunities that 6-7 months ago wouldn't have been opportunities just due to interest rates. We're able to make some deals work that otherwise wouldn't have worked because of where interest rates were. Sellers, the motivation's still there. So interesting time in the market. And, today we're going to be going over what I'm seeing there. We're going to talk about raising capital a little bit, the costs you should expect when you are closing deals and you should factor into deals, and really, how we evaluate all that and take all that into consideration. So on Monday, we drove out to Houston, Robert Cat and I, and we walked 400 units, 2 properties, one 173 unit, and then a 228 unit. And we're trying to learn this Houston market. Some deals in Houston do make sense. And Houston's a big market. There's a lot of opportunity there. So we're really just trying to figure out where we want to invest, where do we want to be, so that we can buy the right properties in the best locations to provide the best returns. So we're really just learning the market, meeting some brokers there. But we went and toured one over near Chinatown off of, what was that street called? Off of Memorial. So over in that area, a B property, probably a C location. And the property was nice. It was in good condition. There were some opportunities to add some value to the property a little bit. The biggest question we have on this one is why rents are so low compared to probably where they could be. They're also operating at about 70% expenses, which either tells you the expenses are high or the rents are low, right? It's probably a combination of both there. But really nice property, good scale, 173 units. And so we checked out that one. The story on that one is they're selling. They're not in a distressed situation necessarily. Both of these properties, the sellers weren't in distressed situations. They both had existing debt on it that the buyer would come in and assume. First one, I think they wanted around $100K a door, and the debt on it was $9.6 million. So it'd have to come to a closing with about $8 million, give or take. And it's really hard to make that one make sense there. So we're working that one. And then we went toward the second property, 228 units at about a 6 cap, C property, C location. And that property is just not the nicest one. The units are really outdated. A lot of deferred maintenance inside the units. And we're going to pass on that one. It's not the quality asset that we're looking for. It's not the quality of tenants we're looking for either necessarily. But what we did get in our trip to Houston was a better understanding of the market. And also we met 2 brokers. But the one that I'm really excited about is Tom. Tom's been in Houston for a long time, been in commercial real estate in Houston for a long time. He knows all the players, knows all the owners, knows all the brokers. So he's very well connected. He's very well plugged in. He has a ton of great knowledge about the Houston market. And so I think Tom's going to be imperative for us to come in and scoop up some of these bigger B multifamily deals in Houston.
Are there certain parts of Houston that you're now exploring, or, you mentioned that those 2 weren't necessarily the right fit. Was it because of the location on top of the other things?
Yeah, I mean, we really don't know yet. One thing we want to do is make a trip to Houston and have Tom just drive us around the city and show us where we want to be, where we don't want to be, what we can expect here, what we can expect there. So I don't have an answer on exactly where we want to be inside Houston yet. We've always been told we want to be northwest of Houston, downtown northwest. And so I assume probably in that area for some B apartments. but we're still learning and still figuring out where we want to be. But I think the next step is going to be heading out to Houston and doing a day-long trip with Tom as he drives us around the city and shows us, where we want to be.
And what other markets is TR3 Capital looking in?
Lots of other markets. Houston, Austin, DFW. We're open to San Antonio here in Texas. We're looking at stuff in Oklahoma, looking at stuff in Florida, looking at stuff in North Carolina, Georgia, Tennessee. So all over a little bit, but southeast here really is kind of where we're looking for the most part. But in Texas, Houston, DFW, and Austin mostly.
And so for others that are looking to invest outside of the market that they're currently in, what are some steps that you suggest, that you guys are doing that they can do as well before they actually go into the market, let's say if it's in a few states over?
Yeah, so the first step when you're looking to enter any market is you need to meet the players there. So you need to know who the brokers are. You need to know who's buying stuff. You need to know who the managers are. In the moment that you meet the players and start making those connections and learning information from the local people in that market, such as Tom, then you can start to learn the market. All right. And you can get all this inside information, right? I get a lot of questions about can I just go to, what website can I go to figure out a cap rate? I'm sure you could Google it. I'm sure, even if you go to CoStar, all these places have some data, but the best data is the local market data, right? CoStar, just because CoStar says, here's the cap rate for the market, it doesn't necessarily mean that that's what's happening right now in this market. And you get that information from the players in the market, the brokers, the managers, the investors there. And you need to establish those connections to people who are local so that they can provide you all the information. Rents were here, now they're here. People were buying it here, now they're here. The sellers, want to sell here, but the buyers are coming in here. So here's this gap between the bid and the ask. So all of that information comes from making connections to people in that market. And that's always what we do, is make those connections to get that local market information.
And you suggest that by just Googling whatever market you're in, listings that are listed and apartments or...
Yeah, not Google, but there's so many resources out there to find brokers and people who are active there, right? You could just Google broker, commercial real estate broker, Austin, Texas, and I'm sure you'd get a list. Also, listings on CoStar, listings on Crexy, listings on LoopNet. Even if you just go to LoopNet, everybody says that's where deals go to die, and that's true. There's probably not great deals there, but there are brokers there, and you can start to establish some connections just by looking at listings, calling the brokers, and making those connections.
All right. And then on the way back, you had a conversation with a group of investors that were looking to start their own fund, and you were kind of diving into all of the costs associated. So can you share what that conversation looked like, as well as advice for those that are in that same position of wanting to start their own fund for a commercial deal?
Yeah. So when you buy a property, you're going to have multiple costs that go into the acquisition of that property, right? So first and foremost, you're going to have, when you put a deal in a contract, you're going to have the earnest money or the deposit, right? So that's capital you're going to have to come out of pocket immediately. Second, you are going to have to pay for inspections if you need any done, right? When you have a lender and it's not structured via seller financing, you have to pay for an appraisal. That appraisal is going to be a few $1,000s. You may have to pay for a new survey. You're going to have to pay for, if you're raising capital and you're syndicating a deal, you're going to have to pay for the attorney docs, the SEC docs, the 506B, the 506C docs. Those are going to cost you $15,000. Boom, like that. Then you also have your blue sky filings. Every time, depending on where your investors are, you're going to have to pay the states a fee to file these things. The attorneys handle it all, but you have to pay. So then, for our last one, we paid, I think, $4,500 in those filing fees. After we paid the attorneys. If you have to create new entities and you don't create them yourself, which you may or may not want to do, you're going to have to pay the attorneys to create the entities for you. Maybe another $1,500. So just in the attorney costs and the filing fees, it's probably around 20 grand, give or take. Then you have your appraisal, you have your survey, you already have your earnest money, you pay for your inspections if you need any done. If you're going to fly out to the property and go view it, you're going to have to pay for your flights, your hotels, all that stuff. Then your origination points, right? So if you have a lender on it, maybe your origination points are anywhere from 1 to 3% potentially, depending on who you have working on getting your financing and what's required. And 1% on a $10 million loan is what? It's 100 grand? Yeah, $100,000. If it was 3 points on a $10 million loan, that'd be $300,000. So those are also costs you're going to have to factor in. Your insurance, depending on how that's structured, if you could set it up being paid monthly, great. If you have to pay that up front, that's going to be a big cost. What else? If you're going to utilize a portal to raise capital and provide updates, get your docs signed, all that stuff, pay out distributions through a portal to your investors, that'll cost you a few $100 a month. So all these costs should be factored into whether the deal makes sense or not. You also have your, acquisition fee if you're taking that up front that you're going to have to raise for. And all these costs should be factored into your cash to close or the capital you need to raise in order to get the deal done and have reserves on top of that, a few $100,000 potentially, depending on your CapEx plan and what you need to do after you take over.
Yeah, and if you want to learn more about other things that it takes in being an active real estate investor, you can go to episode 24. What else is on the horizon for TR3, TRE, any of the other businesses and entities within the organization for the rest of 2024?
Well, right now we're really excited about where rates are headed. So we got 2 deals we're working, 144 unit outside of Austin a little bit, but good city and good population, good property, 144 units. I think that's right. And so we're working that one at about $90K a door, which is very interesting. And we're working on getting debt quotes. So this is why we're excited right now. So we have that deal. And then we also have 123 or 132 slot RV park in Oklahoma City. We really like this one. I think coming in at about like a 7.5 cap. We got a debt quote at 6.25% interest, and on the multifamily deal right outside of Austin, getting quotes in like the mid to high fives for agency debt there. So since rates have come down, it makes some of these deals possible. A lot of these sellers haven't really come up on their cap rates as much as I thought they would, or come down on their price as much as I thought they would. So, they've just stayed there. Like they've come down to as low as they probably could, but they didn't come down as low as I thought they were. Now, some of these people weren't in distressed situations, like the one right outside of Austin. They own this property free and clear now. So they're not distressed at all, other than they want to return capital to their investors and get out of the deal. And then the Oklahoma RV park, same thing. I think they owe about $1 million on it. And so they're not in a distressed situation either. And that thing just prints money. Now, those sellers haven't come down to where I thought they would if they were in extremely distressed situations. So cap rates kind of, they came up a little bit, but they didn't go as high as I thought they were going to. And they kind of just like hit that ceiling and just stayed there. And so we've been in this stalemate negotiating these deals for a long time of sellers aren't coming down, buyers aren't coming up. So the property values, the prices of these properties are just kind of sitting there. While interest rates also were just kind of sitting there or increasing, which made it difficult to make those deals make sense. But now that interest rates are coming down, these deals do make sense, right? When we were running debt at, 7.25%, it was hard to make some of these deals make sense. But now that debt, if we can get, mid fives, low fives, maybe here in a few months, then a lot of these deals that we're sitting at 6 caps will start to make a lot more sense. And so we're really excited at the ability to start getting some more deals done at still good prices, but they're now possible because debt has decreased. And so we're really excited about that. We have these 2 deals in the works, and then lots of others in the works as well. And my biggest question is as rates come down, because they're not going to drop down to 3%, 2%, I don't believe in the near term, but if they can drop down to the low 5s, a lot of these deals can trade. And I'm just curious in certain markets, right? Like that one's at a 6 cap outside of Austin. The RV park's like 7.5. But I'm just curious if they're going to try and follow down. But I don't think they are. I mean, because a lot of these properties, especially the ones we're looking at, these B properties, they're good locations, but they're not Class A, the best locations, but still good locations right outside of the best locations. I'm still thinking we're going to be able to get them at good cap rates going in, but now it's just possible to do that with the debt. So that's the biggest thing we're excited about. Fund 3 is open. We're already getting investors signed up. We already have people entering into Fund 3 and securing their spots. If you're interested in investing in Fund 3, just go to TR3Capital.com and you can TR3Capital.com/fund and the number 3. If you go to that landing page, you can secure your spot there. You can see the docs that we have available and just reach out to us. If you're interested in learning more, we would love to be your partner. We would love to invest with you. Fund 3 is going to fill up pretty quickly though. And when one of these, goes under contract, it's going to move fast. So we already have a lot of the capital raised. We're still raising, and it's first come, first serve. So we don't know exactly which one we're going to close on yet. One might require about $2.5 million. One might require about $4 million. But depending on which one it is, the moment we get it under contract, people come in, we're going to have to close out Fund 3 after we have all the capital, and then we'll open up the next one. So if you want to secure your spot, just go to tr3capital.com/fund number 3. Secure it there. Reach out to us if you need anything. We just wrapped up another amazing One Deal Away bootcamp. We were doing these monthly, and I don't believe we're going to do them monthly anymore. I haven't fully made up my mind. I want to start throwing in some new events into the equation in the mix, not just the One Deal Away bootcamp, but start putting some things together to take you the other, half of the way of raising the capital, where to find investors, structuring the deal for the investors, and putting together an event like that we also run. But we'll keep you updated there. But the next time you see us promoting the One Deal Away bootcamp, if you want your spot, you should secure it, because it might not be for a while till we run the next one. And then we also have a commercial real estate live training August 29th. It's free to join, Thursday at 6 p.m. Just go to treuniversity.com/live training. But other than that, we'll see you next time. Thanks for tuning in, and I'll see you there on Thursday.